Thank you, Royston, for joining me. Really, really appreciate it. And I'm looking forward to this discussion. I know it's going to be very, very exciting. But first, let's start with an intro for you, your background, and your current role.
Thank you, Mohammed. I'm really looking forward to this discussion on blockchain. And so, just in terms of a brief introduction to my to who I am and my background, I'm say Royston DeCosta. I'm the Assistant Treasurer at Ferguson. We are a North American value-added distributor of plumbing and heating products. We are the largest in our industry. We're a $30 billion turnover company. I've been in Treasury 37 years. Started off working for what was called Wolseley before it became Ferguson back in 2002. So I've been there 23 years, but in different roles within Treasury. Um, but currently, I'm responsible for the UK intercompany loan structure as well as the group's Treasury technology. And as clearly the Treasury operations move to the US, I also provide strategic support to the US team on other projects. I also happen to be a senior lecturer for the Center for Technology and Entrepreneurship, CFTE, on generative AI and corporate treasury. And I appear on a monthly panel called Treasury Dragons, where we review the latest Treasury fintech solutions. Previous to Ferguson, I worked at Sky, Gillette, Polygram, Seagram, and Vivendi Universal. And just to finish off, we've been very fortunate, and I'm proud to say won a few awards along the way for our treasury technology. The most recent one I won was the Treasury Today Highly Commended Champion of Change EMEA Award for 2025.
That's very impressive, very impressive. And I think
Thank you.
I I have the right person when it comes to discussion the tools
I hope
around
so.
treasury. So I'm really happy to have you. So before we go into how blockchain can help treasurers and treasury, let's briefly. I know it's a bit complex, but as brief as we can,
Hmm.
explain what's the blockchain network and define it to anyone who is not aware about how blockchain works and what's the blockchain network.
Absolutely. So, at the very high level, let me start by saying the underlying technology for cryptocurrency, which most treasurers run a mile from, and probably rightly so, and we'll talk about that later, about my views, is called blockchain. But let me try and explain, and this is going to be extremely basic kind of explanation. I like to start off with that because, frankly, there's no point trying to overcomplicate something if you cannot, if you don't need to. So, blockchain is effectively a way of storing information so that everyone can see it. No one can change it secretly, and it's very hard to hack. So, if I use the example of, like, say, a digital notebook that keeps a record, like who paid whom, who owns what. But instead of one person owning the notebook, everyone has a copy and they all have to agree before something new is added. So each page in that notebook is called a block, and the pages are linked together like a chain in the order they were written. And that's why it's called blockchain. Now, in addition to that, what I would like your audience to know as well, in terms of complexity, I'll still try and keep it very simple if I can. There are different infrastructures for blockchain. And what I mean by that is there's what they call a public blockchain, which is exactly as it sounds. It's open to everyone. Anyone can join, read, or write, completely decentralized and transparent. And this is what's used typically for cryptocurrencies like Bitcoin and Ethereum. Finally, changes must be approved by consensus, agreement of basically many users. Then you can have also what they call a private blockchain. Now, this is restricted access. Only selected participants can join, and it's controlled by one single organization or a group. It is faster and more efficient because there are fewer participants. There's also what we call a consortium or federated blockchain. And this is partly decentralized. It's controlled by a group of organizations, commonly in industries like banking, supply chain, and healthcare.
Sorry to interrupt you, Royston, but on the
Sure.
private blockchain, wouldn't that be less secure in terms that it's now centralized than the public blockchain?
It shouldn't be, well, remember, in terms of being a private and being blockchain in its nature, in order for any changes to take place, they have to be validated and approved by everyone in that chain. So even though it becomes private, the security around that blockchain does not in any way diminish. It still remains quite high. And then the
Makes
final
sense.
type of blockchain that could exist is what they call a hybrid blockchain, which is basically a mix of public and private blockchains. Some data is public while others are private. And it's usually used in sectors where data needs to be open and secure, like a government or enterprise systems. Now, to be absolutely open with you and your audience, I would say I certainly am familiar with the concept, but the degree to where I would then try and uh, you know, say I've worked with, about blockchain extensively, I would not even, sort of go that far. But I think where we're at the moment in terms of Treasury and certainly with Ferguson, I'm well aware what blockchain is and how and benefits it can bring to Treasury. But I guess my challenge, I could say, is and Treasury in general is getting that adoptability of blockchain, apart from cryptocurrency, which I said is a very well-known form or example of blockchain. But there's still not enough solutions, as far as I'm concerned, that are coming. They are growing, but just not scaled enough yet.
No, that's fair. I mean, that's the reason of us having this discussion because you want to get the ideas and the technology that is out there, and then we can discuss how we can use this to the benefit of the treasury and the treasurers. So it's fair that we don't necessarily know all the answers, but we do have a tool out there that we know that can help us. Now we
Yeah,
need to think together what are the practical solutions that we can have out of this tool. So to summarize, defining the blockchain. So the blockchain is basically a ledger
yeah,
on the network
yes,
where it records everything, all the transactions. If I send you cryptocurrency or documents, it records that I sent you this, and everyone has visibility over this ledger. And only the transaction will be validated when everyone on this ledger approves that this transaction is
it's
correct,
valid.
meaning that
Correct,
I do own the asset that I'm going to send you and
correct.
that the transaction happened and the ownership has actually been transferred. So this is briefly, correct me if I'm wrong, the
That's absolutely correct.
definition of the blockchain.
Yeah,
And people might ask, okay, how do the approvals approve over the network? This is done by something called a node. You can
yes,
see beside me, I do have one there. It's coloring, yeah. It's so anyone. What I want to say is anyone can have a node, so anyone can have access to this network. It doesn't need a sophisticated PC or a laptop. It's very simple, so anyone can access the ledger and approve transactions and validate transactions.
that's
I
correct.
think the next question is then what type of challenges that you see out there in the treasury world or with the treasuries that you can see potentially blockchain coming in and helping to resolve?
I mean, from where I'm sitting, I get that that's it does require a certain bit of innovation and creativity to think outside the box and use those kind of cliche or metaphors. But for me, if you look, for example, at real-time visibility across accounts, we often struggle getting real-time consolidated views of global cash positions across banks and entities. I think with blockchain, that has the ability to effectively offer these real-time transactions where it's tamper-proof across multiple banks and subsidiaries. And it really potentially will reduce the need for manual consolidation and increases accuracy. Because again, it's the way you described earlier on about being a ledger where you can get these transactions are very transparent. Let me go through the list and maybe you can pick up any questions you have on or stop me as I go along because I've got a couple other ones I want to just mention quickly in terms of potential areas that blockchain could be very quite beneficial to Treasury. You've got the reconciliation process, which is also probably quite inefficient when you think of the technology available to a lot of companies today. So that's another area where I feel that could be quite ripe for blockchain, where your almost automatic reconciliation can take place. There's also for me, this is crazy that even to do this day and age, we still have the issue with payments and how we can have 2-day settlements and sometimes payments go astray. And I've been talking to Swift only this last week about how they should improve. the visibility around payments and tracking payments, but not only that, and how do you call back a payment that might be made in error? These are challenges that we still have to grapple with, but I believe Swift are trying to resolve or trying to work on solutions for. But certainly with blockchain and certainly with some of the kind of examples that I'm going to share with you later, there's the ability now, and I know currently with cryptocurrency like Ripple and some of these other currency providers, this is not an issue for them. But certainly, if you look at some of the banks like JP Morgan have in Texas, used to be called JPM Coin, have all come up with solutions using this technology. I would say also from an audit and compliance complexity perspective, I mean, certainly, we think about audit and some of the compliance requirements around it. It's such a time-consuming area, frankly, and quite often transparency is the bit that's lacking because there's disparate systems involved. Where I feel that blockchain could be quite useful, particularly because of the security it offers, but also the fact that it's an immutable ledger and ensures that every transaction is traceable and timestamped, simplifying the audits and compliance reporting. So to me, again, compliance would be a prime example for blockchain. Um, that, of course, nicely leads into fraud and cybersecurity risks. With one of the examples I was going to mention later on is smart contracts, where basically you can have blockchain, the underlying technology for enabling companies to digitally exchange these contracts. They use them in trade finance. They can also be used in some legal circles. So again, this is an area where blockchain is beginning to make some great advances. Um, yeah, so for now, kind of those were the high level examples. I mean, I didn't even talk about KYC, but KYC is kind of for me in audit compliance stroke, maybe, well, not so much fraud risk, but certainly audit compliance. I can see it being a prime target for blockchain resolving that pain point.
Yeah, I mean, the main one that you pointed is the payments. And this is something that is one of the main pain points that we are facing at the moment as treasurers, especially when you go through cross-border payments. And I had a discussion with Nick Philpott. He's the co-founder of Zodia Markets. They provide solutions for corporates using stablecoins over the blockchain. And we had discussion. I will put a link to the episode for anyone who's watching on YouTube. Uh, but he was speaking about the example where you need to do a payment to another country where there is no direct correspondent or direct linkage between the bank in your country and the bank in the other
Correspondent, yeah.
country. Exactly. And it's even worse if you're trying to send US dollars because then it will have to go to the correspondent bank in US. And then if there is any security or compliance flag, it will take literally can take up to 2, 3, 5 months or whatever. So with the blockchain, you don't go through all of this because it doesn't go through banks. It just goes through the ledgers. It's quicker and it's cheaper. And it is easily to detect if there's any fraud because it's immutable. Like you said, you cannot actually do fraud because it cannot be transacted unless there is a consensus or there is an approval from all the validators. Yeah.
Correct. And you're absolutely right. So this is one of the areas where, I was saying to you earlier, I was going to talk to you about my views about cryptocurrency. From a treasury perspective and from a corporate perspective, we just cannot invest in cryptocurrency. It's too volatile. And, there's too much speculative and risk involved in that. But what I'm interested in is the underlying technology, which is blockchain. So if you're able to provide me with all the benefits that, let's say, cryptocurrency can offer, but without that risk, then I'm all ears. I'm willing to listen. I think you see that already with, as I say, one of the banks that already have their own solution out there called Texas, where we used to call it JP Coin, and they can transfer funds 24/7, much more cheaply, instant, real time, and you know, um, but it's only within their own network at the moment. I think they're beginning to partner with a number of other banks. So this is where it becomes very interesting now, where I'd love to have a scenario where what you just described is available for effectively what I'd call a digital currency, and you can do that within like a network of banks or clearing system, that's big enough for it to mean something. I mean, JP Morgan's a large bank at the moment anyway, so in itself, it's quite a huge step that you could still transfer funds from one part of the world to another at any time of day. And I know we're not here to talk about real time treasury, but this is what in some ways is going to come up next because it's already been talked about in terms of real time interest. We know about real time payments, but what does that mean to treasury in terms of our roles today and the future? Is this how a treasury is going to cope with this? This is I don't expect. I know in the Middle East you do work a slightly different working week to Europe and other parts, but generally here the Saturday and Sundays is a holiday, bank holiday or weekend for us, and it's non-working day. But imagine a scenario where, not saying we need to work those weekends, but the way that the interest is calculated and the way that transactions can be completed, there's no time barrier anymore to how those transactions occur. So it's an interesting proposition for the future, from my perspective.
No, I do agree with you 100%. We are not here to advise anyone on going into crypto. And the main reason for our discussion now is to look at the technology of the blockchain itself, because
Absolutely.
this is what can help in various solutions for the treasures, not just payments. And yeah, and I think that's how the banks are now thinking, because I do know, like, for example, I think Societe Generale, if I'm not mistaken, they are also working on a solution to have their own stable coin. So stable coin is basically a coin that is fully secured by currency,
Deposits.
by deposit like treasury or cash
Correct.
or gold, that can move over the blockchain. So you don't get the
Absolutely.
volatility and the risk of the crypto, because yeah. And for us as treasurers, we don't want to have this. We are not speculators. We're here to do business, get payments done, manage the cash. We're not here to invest in crypto. So yeah, 100%, I do agree
So
with you on that.
you've raised some very good points now. I just want to make or very quickly address them. You're absolutely correct. Stablecoin is a very good alternative, in my view, to cryptocurrency because it takes out that risk. It's backed by a fiat currency, and you don't have that risk of volatility as much, but you can still kind of transact it as almost similar to digital currency. But you mentioned earlier on about correspondent banks. So one area where I've seen Treasury beginning to utilize cryptocurrency, but I have to emphasize it's only for a specific purpose and it's for a very limited, if not instant moment in time. And where that applies is trapped cash, another huge pain point for a lot of treasurers. And I've heard that there are some treasure, and there are companies out there that provide a service to enable you to do this, where in order to get trapped cash out, they're able to do it using cryptocurrency. And that's quite innovative. But again, I've not had direct experience in doing that, but I've seen and heard and spoken to companies that have actually done that. And so that's where another, kind of interesting, development and example of how cryptocurrency has been used in the world today.
Have you seen any of the companies or any of your peers using blockchain, not just in payments, maybe in documents? Because one of the interesting tools, which I think you also mentioned, or the interesting usages, is moving documents on the blockchain. So one of the things that comes to mind is bill of lading and invoices as well, for example. So have you seen such examples of the usage for the blockchain with your peers or with any other companies that you had their discussions on?
So you mentioned blockchain specifically. I wouldn't, sorry, documents specifically. I would say not, but I have come across, obviously, as I mentioned, JP Morgan because we bank with them, and I've seen a few presentations, and it's actually it's available today. They offer it to their customers, and the customers are using it to transfer funds from one part of the world to the other. So that's a very prime and very visible example of where blockchain is being used to kind of drive their solution. Other than that, I would say again, it's very limited what I'm hearing or seeing, sort of transparently out there in terms of treasury circles. But I've found there are companies on the sort of truly through the internet, frankly. But you're not surprised to hear that SAP offer a digital currencies hub. I haven't seen or had any experience with directly. There's a company called Fnality who also offer blockchain payment, a blockchain-based payment system. Now, this makes more sense to me. Again, not seeing this firsthand, but the Marco Polo network in trade finance, they offer you blockchain-based trade finance platforms to enable you to, yeah, sort of have your receivables financing, payment guarantees, and risk mitigation on the platform. And then there's a TMS provider who we don't use, but I'm aware of called Kariba, who've partnered with Ripple to offer you some sort of blockchain-based cross-border payments through their partnership with Ripple. Um, and then there's obviously IBM, well, a global company and have a blockchain worldwide, which is I think still in pilot. And then the only other one I've come across is actually no, there's two more. Broadridge Distributed Ledger Repo, who offer digitized repurchasing agreements, and HSBC have Orion, which is offering a blockchain platform for issuing and settling digital bonds and debt instruments.
Yeah, that's
Unfortunately,
very important to mention that when we speak blockchain, we're not just speaking about the payment solution. Blockchain can be used to transfer other documents as well. So the idea is that you can use the blockchain to tokenize, and the word tokenize can be unfamiliar to a lot of people, but tokenizing maybe, if I explain it briefly, is converting a physical document or a physical thing into a digital thing, and then you have it on the blockchain. So in that sense, you can think, okay, maybe we can convert a legal document that is a contract or an invoice or a bill of lading to a digital document, and we have it moved on the blockchain. So you would be able to view the blockchain or the ledger and see that the supplier had actually sent you the documents and the customer has actually received it, or the legal advisor has sent you the documents, or the counterparty has sent you the documents and you have actually received it over that. So it's very important to mention that. But from my knowledge, I haven't seen much usage of that use case, unfortunately, which I think it should be. I mean, it makes sense. One of the things that I just came to mind, in UAE, they started tokenizing actually real estate. So if you want to own, you don't even need to own a whole apartment. You can own part in an apartment, and over the blockchain, you can confirm that you own this part of the apartment or the apartment, just digitally confirming that. So it's very interesting.
it is very interesting and something I deliberately steered clear of because it opens a whole new session that we can talk about, which is NFTs, which stands for non-fungible tokens. And there's a huge industry for this. And the best way of describing it is any company you can think of in this world that's got a brand. Let's talk about Apple. Let's talk about Nike, whatever. They can digitize their brand. And in fact, the simplest way of describing this as well is if you are someone that ever grew up or are familiar with, collecting football cards or some sort of card, when you were young, uh, young person, you might have had a hobby. This is what NFTs have become, where people are paying inordinate amounts of money to own that the digital identity using blockchain to that estate. They call it a digital estate. And this goes on in terms of treasury terms. It can't seem far away from treasury, but the biggest challenge treasury's had is how do you account for this, what they call a digital asset, really? And there is a way to account for it now because it's evolved quite a bit since it first was discovered by Satoshi. I forget his first name, but Nakamoto, I think Satoshi. He was the guy
Satoshi
who's
Nakamoto, yeah.
so yeah, that's how I was getting the wrong way around. The gentleman who I think is reputed to have actually created the concept of blockchain. But anyway, the thing I wanted to also mention is that you're quite right. There's so many different applications for blockchain that may not all be treasury related. For example, very close to what you're talking just now, you can get art, you get paintings that are sort of have a sort of sold as a non-fungible token NFT but has blockchain as the underlying technology for it. And it goes for, we're talking about millions of dollars here, not just a couple of dollars. And there's the other thing that's high profile, Estonia, if I'm not mistaken, were the first country to use blockchain in their healthcare system. Now, I know it's a very small country, but it's proven that there's so many different diamonds. So De Beers apparently use blockchain to record the identity, each identity of each diamond that's produced. So you can never be uncertain as whether this is really authentic or not. And we talked about ESG early on. That also is using blockchain, particularly in terms of agriculture, to identify where this product has been farmed and has it been sustainably farmed. So, I can say, maybe I can send you a little schematic of at least 50 industries that are currently using blockchain.
In ESG, can you, because this is really, really interesting for me. And I was just discussing with you before the call. It's very interesting for my company as well. They're very big in sustainability. So do you mind if you elaborate more on how the usage of ESG over blockchain, or how the usage of blockchain for ESG?
Yeah, I think with one of so with the issue with ESG, or not issue really, but we know it's the right thing to do for sure. There's a lot of regulation and compliance that's required around ESG. And I would imagine that one of the biggest challenges around ESG, apart from trying to be compliant, is how do you report correctly and comprehensively on the supply chain that you've got. And so this is again where something like blockchain can be very powerful in enabling to join the dots. Let's call it that. It's the simplest the analogy I can use. Because when you're thinking about, okay, you've got your scope one, your scope two, and your scope three emissions. Scope one emissions are basically what you're responsible for in terms of the product you're dealing with or the service you're dealing with. And scope two is normally, or not normally, but it's your customers that you're dealing with. Scope three is the bigger challenge because that's your suppliers. And quite often you don't have control over how your suppliers are, sort of, manufacturing the goods or getting the product to you, or, involved in that chain. So again, with blockchain, when you have that ability to effectively monitor, and also not just monitor, rubber stamp that the way that it's being processed and the way that it's being kind of, let's say, transitioned over across to the scope one side, it makes itself very, very powerful for especially for when you look at global companies who are trying to ensure that they are not just ESG compliant, but are driving that whole agenda forward. Because we all know there's certain metrics that we're looking to achieve by 2030 and by 2050, and we know that the planet's getting warmer each day goes by. So I feel that any technology that can be used, especially, and you think about blockchain in terms of how it can be, admittedly, there is some controversy with blockchain to and this is more on cryptocurrency, so it's probably not relevant to what I'm just going to say. But I know there's been talk about a lot of energy is generated to generate a Bitcoin, for example. But when you think of the underlying technology for blockchain and how it can be quite efficient for processing, for example, payments, that to me suggests that it's probably a lot more sustainable than the current process we use for making payments. So there again, I would say that blockchain is a good example and good solution to look at using, particularly for ESG.
That's very interesting. Using blockchain for tracking and making sure that you are doing the appropriate reporting for ESG. I never thought that would be a solution for that. I mean, yeah, it's very, very
But
interesting.
it's interesting. And for me, it'd be the ideal solution. I mean, I'm not saying it's going to be simple, but you think about any type of regulatory reporting, because the transparency is there, because it's secure, and because it should be, and it is, very seamless and fairly effortless in my view, because it happens pretty much in the background. This should be the path that we, Treasury, and more importantly, the companies that are developing solutions should look at, because we haven't talked about it yet, but I was going to say one of the big challenges when we come to talking about it is going to be, in the same breath, regulation. Because, we live in a world where unfortunately regulation isn't
Let's
standardized.
start talking about Leia. Let's go with the challenges using blockchain. Yeah. So
So
you were mentioning regulation. Yeah.
yeah, so regulation is definitely one of the big challenges that we face, not just with blockchain, but pretty much everything we do in Treasury, as you know, because it's a natural kind of outcome, if you like, in terms of what's happened with the economic crisis when it happened in 2008, and then more recently some of the sort of the geopolitical situation that we've been facing. So there's definitely this regulatory uncertainty where it's not evolved symmetrically globally. And we do find different countries will have different laws, regulations around blockchain. And so that still needs to kind of synchronize, still needs to come to a more kind of joined up kind of approach. It will in time, but I don't know how quickly that will happen. Hopefully sooner rather than later. Because the other challenge that we also had integration, right, with legacy systems. A lot of technology companies that are employing is still quite archaic, some we say, probably all outdated. And when you look at blockchain and the new technologies, it's going to be kind of a challenge to try and integrate those into those kind of platform. So the first thing needs to happen, these companies, these sort of corporates will need to update their technology in order to make sure they're future proofed for this type of technology and the future, frankly, not just blockchain. Um, then you've got the challenge with scalability and performance because most blockchains, I would say, especially the public ones, struggle with transaction speed and volume in terms of getting the transactions across on a large scale. It'll come in time, and it is evolving as we speak, but that's still a bit of a challenge for them at the moment. Um, So when you think about the definition of blockchain like we gave early on, the great thing about it, it is transparent. The not so good thing about that, it means that it's visible to all participants. And that then brings up data privacy concerns. But you might consider that's still not a big issue because if you think about KYC, there's an element where if you look on, like we say, company house in the UK, that information is publicly available to everyone. And from the perspective that you want to try and get a certain process done, in the most efficient way, then you're not really breaking any rules. I mean, if you can make it more efficient, instead of having to shift lots of paperwork around and do it through a digital chain, then great. You're just replacing an inefficient process. That's my view. They
But just
can,
on that point, Royston, because in terms of the privacy, no one will know your address until you come and disclose that this is my address and you
correct.
provide the proof that this is your address. And this is going to be normally part of the KYC. So if you're working with a bank, for example, that provides the blockchain solution, regardless if it's payment, if it's contracts, if it's documents, whatever, when you do the onboarding with this bank, you will need to provide that this is my address on the blockchain, and then you provide the KYC. So, and anyone outside of the bank who doesn't know that this address belongs to you, if they even have access to the blockchain, if it's not a private blockchain, they won't know that this is your address. So, in terms of privacy, I think that's at least my opinion. It's not breach, but it only has you only get access to it when the owner of the address tells you that this is, yeah, because for the sake of making the business with you.
That's correct. That's absolutely correct. And so you're right. There are sort of limitations to it. I think it's the point that's being made is assuming that you're publishing your address to the whole blockchain. That becomes a data privacy issue. But if you're not, if you don't need to, and as you say, quite right, within the context you just described, then that doesn't, there's no risk there at all, as you quite rightly say. And let's be clear, I mean, blockchain is not the perfect solution yet. I feel like, like any of these solutions, and it's been around for a while now. I think it was going back to 2006 when it was first kind of discovered, if you like, or invented. But it's still evolving because I only came across it 10 years ago and no one had heard about it in Treasury circles. And today, there's a lot more discussion around blockchain and certainly its users I've already given examples of. So give it a few more years, and I feel that we've got the fundamental basics that makes sense and kind of got great potential. It's now trying to make sure that it kind of evolves to a more slicker, more kind of um, you know, so that serves our purpose, is what I would say. Um, in terms of time, are we okay, or because
Yeah, I think the
I've got
last
7
question,
minutes?
I have one more question, one last question for you. I
Sure.
really, really appreciate it. Because you mentioned the last thing you mentioned, it will take time for us to, for the blockchain to be out there. From your opinion, what do you think should drive, or who do you think should drive this? Is it the regulators? Is it the banks? Or is it the treasurers? My opinion is the banks. The banks should come, or the financial service providers, not the banks, should come there and say, okay, we think that this is a good solution. We need to put the uh, compliance in place and the checks in place. And then they present the case, okay, and this is how we start and get the blockchain solutions out there. What's your opinion, man?
So, my opinion, for what it's worth, I always use the expression go for what we have, what we call low-hanging fruit, whatever's easiest and um, ideally addresses the pain points that we have. And two of our biggest pain points generally in Treasury, I would say, are payments and KYC. We can talk about cash flow forecasting some other time, but that could fit in there as well. But so to your point, I would say the banks for sure in terms of payments. I don't think the bank can solve all of our problems, certainly in terms of sort of using blockchain. But it makes sense that Sunny JP Morgan have already started NSA, they've got their own solution. And if they can then build and evolve that to a more global solution that actually works across banks, fantastic. That would be great. Obviously, you've got CBDCs, which I didn't mention, central bank digital currencies. Their government has a huge part to play. And they are playing. There's a lot more governments and countries that have implemented or have are certainly working towards issuing their own digital currency. I think there are probably 8 or 9 countries that have already issued theirs, but there's a lot more that are looking to issue their own. And there's reason why they're doing that because they can see the potential benefit of bringing something like that in. So I think governments would definitely and need to play a very important part in helping that technology to evolve. Because I've noticed already, if it wasn't for the UK government bringing open banking in to the UK, I don't think we'd have seen half the innovation we've seen already. So it's quite an important piece of regulation that they've brought in. But it's a funny way I've answered the question because I've just thought about it. Typically, you always or generally would look at what's the need. But in actual fact, what's happening here is you almost got the banks, then you've got regulators, in my view, and then last but not least, the corporates coming and say, "Okay, we could use that." When typically it should be the other way around. It should be the corporate saying, "Actually, we need a solution," and I kind of think we do, or we have been saying that, but probably because no one's been able to either, or no one's listened, or no one's been bothered enough to do something about it. So to some degree, we've just kind of been the bit at the end where it's taken the banks and then the governments, and then eventually we come in and say, right, we've always been saying we want a better way of making payments. Frankly, thank you for bringing that out. But then there's still KYC and there's cash flow forecasting, and then you can go on to the other pain points in Treasury that I'm sure you're just as familiar as I am with.
I think that's why we're having this discussion to try and spread the awareness and let treasurers know out there that there is a solution that might help with the payments, might help with the trade finance as well. That when the awareness goes up with these
Yes.
podcasts and these episodes, then the demand for these solutions will happen. Because at the end of the day, the FSPs, they are in for it for business, for profit. So if it doesn't make sense for them to have the solution in place, if there is no demand for it, then yeah, uh,
Yeah.
there's no point in having it, even if it's a great solution. But if there's no demand, then. But I think that's why we're having this to spread the awareness, let people know, okay, there's this solution out there called blockchain. It can help you in this, and that, and then we can get the traction there. So yeah, I think that's the right
It's
way to
interesting.
think about it.
I don't mind sharing this rather interesting story, I feel, anecdote very quickly. 7 years ago, I won't mention the name of the bank, not to embarrass them, but uh, our TMS vendor at the time and I met with this. It's a very large US bank at a conference in the US. And the TMS vendor developed a solution for KYC, essentially, which was like digital banking, where you could use their platform to exchange digital documents with the bank. And it's interesting at the time, they were really not interested at all. It was interesting the timing as well, because it was, what, 2018. Uh, let's say, look, fast forward to today, that bank is probably one of the most advanced, when I say advanced, it's spending a lot of money on developing their digital technology. And I think a lot of other banks are doing the same in terms of trying to engage with not just blockchain, but other initiatives in terms of technology. So it might have been just the timing was wrong. But again, to your point early on, who probably should lead this? I would say, particularly because of how neatly blockchain fits to payments, I would rightly or wrongly put it at the feet of the banks. And then the fintechs come after that and regulators as well.
Yeah, but our job is to spread the awareness 100%.
Yes. Yes.
So, and thank you a lot for being part of this and spreading the awareness around blockchain.
My pleasure.
Really, really appreciate it. Thank you for your time. I know, yeah, we are running late on the night, but I really appreciate it. It's been a really, really exciting discussion.
Thank
Thanks a
you.
lot, Royston, for being my guest, and see you in the next discussion.
Definitely.
Thank
See
you.
you.